Hi, I'm Rachel.
And I'm Henry.
And today we're going to take a look at some questions, see what we know about it, and then bring in the expert.
We're in the Know, Idaho, and today we are going to be talking through some questions, and we're going to be asking an expert their opinion on it after we're done with that. So, Rachel, I'm excited. What's our question for today?
Let's find out. I'm scared. Define any or all of the following.
Oh boy.
Income tax, property tax, sales tax, luxury tax, flat tax.
Okie dokie. I'm going to take sales tax because I believe I know what that one is. That's just the tax on anything that you sell up to a certain point. You get 6% taxed off of it, specifically if you're in Idaho. And that's just an overall sales tax on basically anything you sell. Also, it could be an item from a grocery store, or it could be an item that you buy from a coffee shop, or it could be, getting your hair cut. Everything gets a 6% sales tax, or should.
Specifically, though, it depends on the state, I know, is sales tax, whether a service gets a sales tax on it or a good. And that tax is applied from when the item goes from wholesale to consumer. So the grocery store doesn't pay sales tax on what they get wholesale. They collect sales tax from the consumer and then they pay it to the government.
Okay.
So the sales tax goes to the state for any goods and some services, depending on if they judge that service as creating like a final good for the consumer. So income tax, I know, is when they take a portion of your earnings, and your employer is responsible for collecting that and paying it to the government. And so it also depends on the state. I believe Idaho has an income tax, but it's not as big as some other states. Like California's is something like 14% or something like that. It's crazy high. Property tax is on property. Right. So every year the county assessor kind of decides the value of your property, and then you pay the tax based on the value of your property. So if it goes up, you pay more tax. If it goes down, you pay less tax, but then you couldn't sell it for as much because it's worthless. So anyway.
It's kind of weird, not gonna lie, that you have to pay taxes off of something like if you buy it outright, you still gotta pay. I don't know. That's kind of odd. I am personally lost on luxury tax.
Luxury tax. I think that's like there's certain goods that are deemed luxury goods. Like really, really fancy cars or something like that. I'm not sure that's an official tax, or if that's just kind of like a term for. I'm really curious to see what our expert has to say about that. A flat tax, I'm pretty sure, is where everyone gets taxed the same, versus an income tax, which is bracketed. So if you earn more, you pay a larger percentage. Right. So I'm not really sure if that's exactly what that is, but it's meant to be a little bit more like evening the playing field in terms of what taxes you're paying. Right. It's kind of the opposite of like the tax the rich idea, maybe?
Yeah, that's probably a good question to ask our expert here.
Yeah.
I know a little bit about sales tax, but for the rest of them, in the know, I don't know. Let's call in an expert.
Welcome.
Yes. I'm glad you seem to know quite a bit about all these taxes. That's good.
Oh, nice.
Yeah. These were new to you, Henry?
A couple of them were definitely, specifically luxury tax and property tax are the ones that I'm the least familiar with, that I was hoping you could shed some light on.
So one thing about property tax, Rachel's thought of what property tax is exactly right. That some people feel like, well, if you don't own property, you don't have to pay property tax. However, if you're renting somewhere, the building that you live in or the property that you live on, the owner has to pay property tax, even though you're living in it.
So if it goes up, your rent goes up because they have to cover it. Right. So it's not just your mean landlord raising your rent necessarily. It could be that their property was assessed as more valuable, or significantly more valuable than it was in our area, and so their property tax went up to the point where they're no longer making a profit, or they're in the hole.
So they have to raise your rent. So everybody ends up paying property tax.
Wow.
Yeah. So property tax is supposed to be spent on specific things that the state has decided pretty much.
Okay.
And the main thing that property tax goes to pay is for public school.
Oh.
Oh.
And
So if you're homeschooled, or if you're homeschooling your kids and you're renting a property, basically you're not getting any of the benefits that you're paying for just the government to spend your money.
to pay for school, public school, yes.
Wow.
And so that's the majority of place that property tax goes. But sometimes a city, a specific place might say, well, we need to fix these roads. They're a mess, you know. And so they have a tax for the roads or different things, the local roads and different things like that. So property tax is supposed to go to the local place where the property is. You were right about sales tax. One thing I have a thought about sales tax is interesting is that the government wants that money to spend on whatever it's doing, right? But they are causing people who sell things or provide services to collect it for them.
Right.
And that's kind of something to be aware of and something to think about.
As a business owner, I am responsible for charging the sales tax, collecting the sales tax, and then paying it to the government on behalf of my consumer.
And if you were selling goods, as you stated before, if you're buying them from a wholesaler, you actually have to have a wholesaling license
That's correct.
to get them from the wholesaler, and the license excuses you from the sales tax.
Wow.
Yeah.
When you have to provide your number to buy that thing at wholesale.
I'm also curious as to the way that taxes work overall, because as just an individual, whether you're a business owner or not, you know, tax season is coming up here. The government knows how much you owe them personally. They already know that total, more or less, but you have to specifically provide that total and show your work. Otherwise, you get audited because they can audit you because they know exactly how much you already have. But it's not like they can just send you a check and be like, hey, here's your taxes for the year and here's how much you need for each bracket. I just feel like the burden is on the wrong side here because they're wanting your money, like everything that you work hard for and what keeps you alive. So
It's basically a self-reporting honor system.
Basically.
Unless you get audited.
Right. It is like that. So where the reason they know what you owe is because there's two sides pretty much, at least for income tax. There's two sides to it. There's the person who made the money, and then there's the person who gave them the money. Okay, so it's you got the money from your employer.
Right.
So your employer has to say, I gave this money to Henry. And then Henry has to say, I got this money from my employer.
Right.
And on the business side, the reason why you would want to do that is because if you say, well, my business earned this money, but then I gave it to my employee, well, then I don't pay taxes on what I gave you.
Then I would be paying taxes from
Exactly.
that.
So the employer is motivated to tell the truth about that.
Right.
And so you are motivated to tell the truth because the employer already told the truth.
So if I don't tell the truth, I'm going to get audited, is what you're saying.
Well, not really, no. The way that they choose to audit people is sometimes it's random. Sometimes it's when they notice their machine.
Vast irregularities.
Their computers actually noticed vast irregularities, or they really want to trouble you for a particular reason.
Yeah, like that's how they got Al Capone. Wasn't for any of the other stuff that he did. Wasn't for, murdering or taking people's property. It was tax evasion.
Yeah.
Brought the full...
Sometimes they use tax prosecution or auditing to catch people or to trouble people. A luxury tax it's like what you said, it's on super luxurious things. And I do think that some states do actually have a luxury tax, and it's on specific items like boats and yachts and
Limos,
really fancy cars.
Bugattis.
Yeah. And so I don't know if Idaho has a luxury tax, but some states actually do. It's not just a protesting statement, it's an actual thing.
Interesting.
And then a flat tax, you were right, Rachel. A flat tax is where everyone's taxed a certain percent of their income. And I'm not aware of any state or any part of the United States that has a flat tax.
It's like it's something that's advocated for a small government position,
Right.
kind of a thing.
Because it's more evenly distributed. You know, the government does actually need money.
Right.
They need to defend us. You know,
Run the postal service.
Yes, and that's questionable.
Yes, at this point, that's questionable. But that was supposedly what that funding was for.
They used to run the postal service very well, and or for roads or libraries, all of the good things that the government actually does need money for, and so getting money from the people is a good thing. However, the idea that if you make more money, you have to pay more taxes, some people feel like that's not really freedom. A lot of times when people make a lot more money, they also have ways to shift their money around and do different things with it, find the loopholes and things so that they don't end up actually paying
Right.
as much tax as if it was a flat tax. And they just made this huge amount of money, and it's a percentage of their money. It's going to be huge because of how much money they've made.
Which is why you see billionaires who like their money isn't necessarily liquidated. Like it's like their net worth is $1 billion, but that just means that they have access to that capital, but that doesn't necessarily mean that they have that amount of bills in their safe today.
Right.
And because all of their money is basically disconnected from their person, and so they're not personally taxed.
Yeah, there's
as
all
much.
kinds of things that wealthy people do to escape tax.
Right. Because they've made their money and then they're smart with it, like investing it into assets that they can borrow against, so that borrowing is money that they have that's non-tax deductible, or different things like that.
Right, so a flat tax is a dream and a hope that one day everyone will be taxed the same, and if you make barely enough, you'll have barely enough, hardly any taxes.
Thanks so much for helping us out with some of these questions that we were, drawing a blank.
Well, this one you seem to have under control.
Rachel does, and that's what I'll say.
Yay, small business.
Don't forget to support your local businesses.
Yeah, that's in the know. Idaho.
Catch you next time.